What's driving the changes of consumers' expectations of financial institutions? I think if we look at the broader market, what you'll see is that consumers are out there and exposed to all sorts of different technology platforms, fully integrated, simplistic experiences. So as bankers, we have to remember we're not just competing against other banks, we're competing against those for same mind share, wallet share. So companies like Uber or Amazon had raised the bar for our consumers. Those expectations have evolved, and they're now table stakes for what we need to deliver as financial institutions. Some of the most common shortfalls that we see in the client experience in banking today include just the overall length of time it takes to onboard a client. Whether it's a commercial or consumer client, whether it's a mortgage or a HELOC, or simple as a line of credit. Our processes are simply too long, and the processes have too much friction in them. If we think about other areas that we're impacting, it's the inconsistency in the experience. As you change and move from different channels within the bank, is that experience exactly the same? That's problematic as well. The key is to focus on areas where there's friction and to remove that to make it a frictionless experience for our customers. A bank may look to partner directly with a fintech to improve their speed to market. There's a lot of different areas in which the bank is looking to address, and frankly, fintechs have that specialized expertise. With that then means speed to market. They can turn this on much quicker, which then drives the question of should we build it or should we partner? Again, from a cost basis standpoint, longer term with the focus on ROI, it's definitely going to be better to partner, get there quicker, and provide that specialized service directly for the consumer as they need it and aligned with what your brand is trying to represent in the market. Some of the best practices that you can have as you work with a fintech to deploy and implement a new solution really comes down to one word and one word only: scope. Make sure that you have a deep understanding of what the project is going to entail. Make sure that you align your resources with the demands of the project itself. Furthermore, and what I suggest is look at that scope in terms of, is it a big bang? Are you trying to bite off too much? Look at different phases so that you can get to a product in the market and start optimizing the value of it earlier. That will then create a team environment where you'll be more successful in the long term as you roll out the bigger, broader solution set. There are a number of different key performance indicators that you can look at to determine the success of your investment. They range from the broader NPS, Net Promoter Score. How did we do? Are you willing to recommend it? Or a CSAT, the client satisfaction. How did we do on a scale to 10? But the important thing is to understand what it is you're rolling out and identifying a metric that best measures that. So if you're opening new accounts or driving new loan volume, look at it as a month over month, week over week, quarter over quarter. Hold yourselves accountable for a metric that is easily definable and determines that there's a true ROI there at the end of that project.